Wednesday, March 22nd, market analysis, Stan Ehrlich. It is 10:55 a.m. in California, about 5 minutes before the Fed speaks up. This is the first time I've done this. I'm going to try to correlate what happens to the market after commentary about interest rate changes in the future occur around 11 o'clock California time. Again, today, Wednesday, the 22nd of March. Double checking on that. Oh yeah, 22nd of March. You can reach me at info@ersignals.com. If you have any questions, currently the S&P 500 is down just a little bit. 2,700, it's a quarter of a point, almost nothing you could say unchanged. And if you look at the activity this morning on the 15-minute chart here, we opened approximately unchanged, a little lower, made a minor new high from yesterday, and then sagged back down. And only about a half an hour ago, we made a low approximately at a point or a little bit more than a point lower than yesterday's close. And now we're coming back to 18 cents lower, nothing. Right smack, basically unchanged, about to have the Fed make their commentary. So there's a gap to close under the market. If the commentary causes a little bit of a down move, not too badly, I would expect to see, and that's going to be on the chart on the right, that the gap from yesterday's low to Monday's high is closed. And that means we'll come back down to about 394.20, 4 points from where we are right now, which is basically yesterday's close, making a new low by about 3 points. But we will also have an outside down day at that moment because we did get above yesterday's highs. Now, that's not going to be an official sell signal, so I won't like it a darn bit at the moment. And if it closes lower on the day, you will have a bearish engulfing, which could imply that the market is going to drop off a little bit more in the next day or two. And we have to watch to make sure the support holds prices and they don't start to collapse and break significant support. If the gap is closed, I expect it will turn around and rally right back up, maybe today. It might take a day or two, maybe by the end of this week, higher than today's high on a closing basis. So we only have a minute and a fraction until that activity starts. Let's go to the next tab here. And this is the 1 minute chart on the Spider and the 1 minute chart on the DIA. Good. And the 1 minute chart on the QQQ. Doggone it. Here we go. So we can see what's going to happen here in a very few number of seconds specifically. And I'm not going to wait around for all that. So I'm going to come back to this in a moment. Futures. Here's the interest rate futures contracts. They did make a minor new low on the bond market, which I expect is building a base. And I'm looking for a breakout above 133, 134 actually, on a closing basis for a major breakout to the upside. Very bullish. If this announcement in about a minute causes that, well, we'll see what happens. Should be quite bullish for the stock market also. That means rates will be implicated to be going down soon. Some kind of commentary. Remember the Fed's comments, sometimes the marketplace hinges on one single word, but and that will take maybe minutes after they start talking, but we'll see. Okay, comments may be coming out. Let's look at the 1 minute chart real quick. I'm not going to linger on this too much. We can see that we're down 37 on the Spider at the moment in the upper left, now down 13. So this is getting a little violent here, which is absolutely very normal for these circumstances when the Fed wants to yickety yak. And now it's coming up some, minor new high. So let's come back to this in a few minutes. I want to now go back to the futures markets. Looks like we're getting a little strength in the 30-year long bond. Next chart is the 10-year notes. No, I'm sorry, I had them backwards. This is the 30-year long bond, and that's, they're out of order. Okay, 30-year long bond climbing just a hair, nothing particularly dramatic. I want to get up on crude oil to that resistance area in red. That is just about where today's highs is. So we should be encountering major resistance and a potential good short sell area. We have just jumped on the S&P 500 to 140 higher on the day. So the Fed is commenting at the moment in a bullish direction. We are now up 105, 120, and the volatility has increased dramatically, but that is not a surprise. It could have been to the downside, you never know. So now we have a new high and the potentials, but remember, markets move in anticipation and reverse on realization. So now the anticipation is in the process of becoming fulfilled. And I don't think the Fed's finished with the commentary. I'm not sure how long it lasts. It's probably a variable. And we're giving away a lot of that spike up here in the last minute and a half. In the next several minutes, what I want to see is higher highs again. That'd be great. And in the next 15 minutes, stay there. That will probably be absorbing the marketplace, absorbing all of the comments that the Fed has made, and that'll be good news. What I don't obviously want is for it to reverse dramatically, which happens sometimes, and end up with that bearish engulfing. But I'm still concerned about that gap. That will not go away. Gaps are almost always closed. You've heard me say this. Gaps are like a black hole in space. They tend to suck the price action back into the gap area, the black hole. So that's because I've got a black background on my charts, well, or whatever. It's hanging in there at the moment with only a 30, dipping a little bit. Okay, let's not dwell on this too much. We're going to come back to it. You can keep your eye on this number in the upper left-hand corner and make sure it still stays green at a minimum. And the bigger, the better. 2-3 points higher would be even great. Next, futures. Going back. Okay, so I want to go back to bonds real quick. Here we are. Doesn't look like they've moved up or down very much since that volatility in the stock market. So that's interesting. No change in commentary. Crude, still no change in commentary. Hang on one second. So yeah, I like this. So far, so good. Crude could be a good short sale. It's slightly higher. Next chart in futures, heating oil. I'm thinking it's a short sale in this ballpark range right here. I want to see a little more conviction. Start to make minor new lows for a day or two. That would help. Spiders up a dollar now again, 90 something. So it came back up. Natural gas. Testing support. I drew that support line in yesterday. We are above it again today so far. It's a possible double bottom in the making. I can't tell yet. Next chart. Soybean oil broke support a couple of weeks ago, had a bad buy signal 2 days ago. It did get ruined today. So it was a small loss. The trend is down. That did worry me to begin with. And all we've done really is rally back up to resistance, and we're almost at new lows. So bearish situation, bad buy signal, trend down, almost new lows. That's bean oil. Soybeans keeps coming down, oversold. Don't chase a oversold market. Hogs, same commentary. The E-mini currently up a little on this is delayed data, so we'll have to wait a few minutes for it to catch up. But we're up 150 now in the spider, 1.5. That's good. Good. Next, we are on wheat. I'm going to pass by this. OJ is forming a pennant. Been talking about it for a couple of weeks. We have to wait until it breaks out. Next, live cattle is oversold and should start to rally. It came back quite a bit after a new low today, but that's not a reversal as yet. But don't go selling short a market that's oversold. That was corn. Live cattle, I meant. Live cattle. Sugar, don't really care. High-grade copper, don't really care. Cocoa, I want to get to the precious metals here in a moment. 10-year notes. Gold, back up. Gold market has been very bullish. We caught the low on a double bottom formation and just a new high for the whole trend a couple of days ago was overbought, now not overbought, so it's ready to go back up. Excuse me, and came back into some support. Platinum, same kind of thing, but it didn't get overbought. So I think platinum is about ready to jump pretty quickly by making new highs for a couple of weeks, plus, of course, since early February. And we did get the bottom of platinum. That's a green bullish ER signal. Hey, the S&P now is up 2.17, 2.40, new high, 2.50. This is great. I'm going to look at the chart here real quick. And remember, please, it's not really great until you get out of your trade. When you have an open trade, you are at risk. I don't care how much profit you got. And for that matter, if you got a losing trade, it could come back to make money. But, you know, money management comes into play in both cases. Very important, very important, very important. This is great. Now up 2.5 plus, making new highs for a few more days. And the DIA is coming along just great. The spider is now, I'm sorry, the QQQ is now getting overbought, people. The QQQ is on a daily data RSI chart above 73 at its rally high a few minutes ago. And that means we are approaching a minor high. Remember what I just said, markets move on anticipation and reverse on realization. So this commentary from the Fed must have been fairly friendly. I mean, we're not up a tremendous amount, 2 points. It's not like it's 5, 6, 8, 10 or something like that. So it's good, but not fantastic. How quickly can you give away 2 points? Yep, real fast. So don't take your, don't believe it's going to keep going straight up. That's not necessarily true, especially since the fact that daily data on the QQQ is overbought. So I've touched on futures. I've talked to you about the indexes, and I want to quickly look at forex to see if it's being affected to any degree. We have a little bit more rally in the long-term bull move now in the Eurodollar, which we did catch the bottom in September to the exact low day. Next symbol, dollar index. We caught the top of the dollar index to the exact high day back in September. That's what the ER signal strategy is built for, picking market turning points. At the day the market turns, my strategy won't tell me if it's going to be a 6-month bull move or bear move or something like that. Only that a turn in the market probably has just started and should make some money, because that's the track record. Next is dollar to the yen. We had a sell signal a few days ago. I told you about it at the time. We've rallied back up a little bit, but we were oversold for the last 2 previous days. Not anymore today. So it could be ready to make new lows. I wouldn't doubt it. Looking good. Lastly, and we're up $1.30 on the S&P right now, so it's sinking back a little bit. I think the rally high was about 250 higher, something like that, maybe 3. So it's holding a net gain for the day. I wouldn't call it great. I'd love to see this up 4, 5, 6 points, especially near the close. That means really the end of the day. Okay, and I want to look at sectors real quick here, because we're looking at banking sectors, etc. Bullish engulfing, doing okay, not great on my first symbol, which was KBE. Second one is XLF, and it is doing fine, not great, but working. OIH has a buy signal today, right now. This is probably caused because of the Fed commentary. So brand new buy signal as of right now in the XME sector, and it is the metals and mining sector. Next symbol, OIH. Came down, closed the gap, coming up a little bit. Looks like it could make new highs and keep going up. It's oil services next. No commentary. There's still a tiny gap to close below the market, and no big deal. The last sell signal was a really good one, caused it to get oversold. Buy signal 2 days ago on this symbol, which is XRT. We made a minor new high this morning, but it doesn't look like it's particularly super active. But we caught the low, but it's only been 2 days and not that much rally. Next, upside breakout, but getting overbought in the process, which is not uncommon on breakout days. So I wouldn't run after it, but you could get a little more follow through because of the significance of the breakout and the continuation of the trend. I think we'll be back to these prices in a few days or soon because it's overbought right the moment. Last one is XLV, minor new high since we got a bullish buy signal on the bottom of the break over a week and a half ago. Love it. Let's go back real quick here to the indexes before we depart for the day. Okay, we made it above the 400 psychological resistance level of 401.75. And that was only about 5-6 minutes ago. Now, the bullishness is absorbed in the market for the most part. That came out at 11 o'clock California time. We're now at 11:11, so it's been 11 minutes. And we're still hanging in there at about 78 higher, which is not great, but markets don't go straight up and they don't go straight down. Hey, keep tuned. See what happens by the end of the day. There's still that gap to close. We can't forget about that. And that's the high of Monday. You have a great day. Profitable trading to you. Talk to you tomorrow.